Maria in Davos, sponsored by Invesco QQQ.
Thank you so much for being with us at this moment in time when you are completely changing the company and realigning into three segments. Tell us why you believe that realigning the company into these three separate sectors, which is, of course, advanced materials and aerospace and automation, will create even more value for shareholders.
So it's a great story. We started this about 2 years back when I started as a CEO. To really think about what should be future of a 100-year-old company. It's been very successful run. We created a lot of value for our shareholders. But the next stage has to come from much more from growth, which really made us think about spinning into three companies. So if you look ahead now, chemicals is a standalone business, Solstice, and aerospace spin will occur in the second half of the year, and it's going to create a compelling aerospace company and therefore aerospace stock. And automation business is going to take benefit of physical AI, and we will talk more about it. So value created in the last 25 years is impressive. Value created to be next 25 years is going to be even more stronger. So I'm excited about what's coming ahead of us.
What product or solution in the sustainable portfolio would you say has the biggest growth potential?
I mean, if you look at our aerospace business, the growth potential there is just driven by the end market growth. People want to travel more. Then the growth of aerospace is occurring with the defense sector, which more and more products are required to protect each nation. So aerospace business will see growth in high single digit for the next perceivable future. If you see the automation business, it's going to benefit from the whole trend of physical AI, which is different from the AI we all talk about. The physical AI is how you take benefit of industrial assets and the data which is residing there and make them more productive, which is a slightly different problem to solve. And I think that's an opportunity for the automation business.
How are you using AI specifically right now?
So internally, we are no different from any other company, which are going to use AI for software development, for customer experience, many of our functions like HR and finance. So that to me is almost necessary for a public company to drive its productivity. Opportunity for us is how we are using AI for our customers, that we take our install base. And the challenge is that when you think about AI in context of you and me as individual, our data could be trained in public domain. But when we look at industrial system, there's no data on internet. The data is in some system in a supply chain or in energy infrastructure or in buildings, which is stored in systems held by companies like Honeywell and our peers. So first we have to unlock the data, and that data unlock has to solve a problem which is different by sector. So problem of a life sciences customer is different from problem of a data center customer, which is different from problem of a semiconductor customer. So that's our opportunity to unlock this data, train it for the sector we serve, and drive the customer opportunity for more growth, more throughput, reduce cost to serve, and also solving the skill issue. So our tools are going to help customers to drive that. So it's something which is slightly different. Fundamentals are the same. Principles are the same. You take data and you train it. But how do you do it is slightly different.
Well, it's a good point because there are a lot of worries that AI is going to kill jobs.
Not in the segment we serve. I think in our case, it's all about making people more productive. Because if less people are coming into the workforce to drive an operation of a building, of a plant, of an asset, then how are we going to solve it 10 or 15 years from now? And the method is going to be you take younger people with the lower skills, but give them the tools so that they are able to run it with the same level of sophistication, which very experienced people are doing today. So for us, it's not a substitution, but it's a growth from an industrial segment standpoint.
Do you have the clarity and the capital structure in place and the regulatory demands in place ahead of the spin?
Absolutely. I mean, we are very sensitive to Honeywell. Will be very sensitive to maintain this investment grade rating. We want to present our shareholder a compelling proposition so that we are highly marketable and a safe stock to invest in.
And you would expect that production initiatives like all of these will trigger even more growth. What kind of a growth expectation do you have for 26 and 27?
We have, first of all, a good 2025. We will grow. We have announced Q4 results. It will happen in a couple of days, but we'll grow somewhere between 5 to 6%. We're a $40 billion revenue company, so just put things in perspective.
That's a big deal.
That's generating more than $2 billion plus of a growth in a single year. I don't expect 26 will be much different. Now, the drivers may be slightly different here and there, but fundamentally, we see another year of a strong growth.
And in terms of aerospace, can you give us sort of the 30,000 feet answer on what you're seeing in terms of demand right now?
Very strong demand in commercial aerospace, which we all know, but the business jet demand, the business travel demand is also strong. And the strongest demand is in the defense, which is 40% of our aerospace business. And it's not only from the United States, but other governments are investing to upscale their defense infrastructure. So it's one of the, all engines are firing in a business in which all your end markets are growing. This business is going to grow high single digit for many years ahead.
Well, I mean, the defense business is so important, particularly now as President Trump has put national security as a priority. But, he's telling defense companies you can't pay dividends and you can't buy back stock before you actually build the products that America needs. What's your reaction to that?
So I think President's intent is that companies should invest to create volume.
Right.
And we have been doing that. We have generated volume growth in our manufacturing for last 13 or 14 quarters in a row, more than 10%. It means we are investing in our supply chain to produce more, 40% of which goes to defense. So I think President's point is don't over-return the money to the shareholders before you invest in the business, and we are doing that.
Yeah.
And I think it's a right call. I mean, countries' need come first, and then shareholders and others should follow. And we are already doing it. So I agree with what's the ask. And we are talking to Department of War on the strategies to meet their increased demand. It's a good news for us. And we need to satisfy it with our volume increase.
Well, I guess there's just so much worry that we can't make the products fast enough.
That's been a challenge on overarching supply chain. So
as a country,
right? Because it's a tiered supply chain. So Honeywell will supply to a Boeing and the OEs, but we have 2 or up to 3 tiers below us to serve us. So when we are expanding volume by, I would say, 10 to 15% every quarter, it has to happen all the tiers continuously, quarter after quarter, year after year. And that, I think, is a challenge when you go to the small supply base. People are able to invest capital. People are able to hire more staff. We are helping them a lot over the last few years. But keeping that momentum for next 3 or 5 years, that's where the challenge is. It's not large companies which are well capitalized and have resources. I think our ability to take the whole supply chain with us is where the challenge is.
Yeah, that is just extraordinary.
Right.
You've also made some very aggressive targets. You wanted to reduce carbon neutrality by 2035, and you wanted the 10-10-10 goal for 2024 to reduce GHG emissions by 10%. Mm-hmm. Where are you in these goals? You want to reduce the overall scope.
Yeah, so we made a commitment of, let me go back. One of the reasons we did that is it's good for the climate. But we as a company sell many offerings which reduce emissions. So unless we don't do it to ourselves, it's hard for us to argue with others they should do it. So our goal is twofold. By 2035, we'll be carbon neutral. We are well on the way to do that. And by 2030, it'll be 50% lower than what it will be. Now, we do multiple small projects to reduce emissions every year, and we are right on track to deliver that on or before 2030.
So what would you say is an appropriate growth expectation for Honeywell overall, and include in that some of your production additives that you are expecting? So
we, as a company, as I said, we expect Honeywell Aerospace to grow high single digit. The Honeywell Automation business should grow mid-single and deliver high single-digit earnings growth every year on a secular basis for a long time in the cycle. And we are doing that without getting linked to one big mega trend, because cycles come and go. There was a shale cycle, there was a metal cycle, there's a data center. We want to play across industrial segments and give this high single-digit earning growth, and that's our value proposition.
But do you feel that a lot of this money is overdoing it at this point? I mean, we're talking so much about trillions of dollars spent on data centers and AI every year. Jensen Huang was with us telling us it's going to be several trillion every year. I mean, are we going to see a return on investment anytime soon?
Well, Maria, this is no different than, as mentioned, the shale. If we were 10 years back, shale was going through the same cycle. So everything is a cycle in which investment happens and then investor asks for returns. And when returns have to be spoken about, then some of the underperforming assets, they go out of the system, right? So it's a cycle comes and goes. To me, we are getting more excited about the cycle, but people like us, I've seen the high growth in mining, then in shale, now in data center. They just happen. And I think the economics take care of itself when the upcycle happens. And at some point when the returns becomes more demanding, then the tail of the people who have lower returns, they automatically get settled in the system here.
What's your sense of the macro story right now?
Macro story, as I said, we do expect 26 to be as strong as 2025. I mean, we want the political dialogue to stabilize things more. I think it does people a little bit nervous, but we don't see any change in demand. We think things being very stable, and we do look forward to another strong year.
Great. We will look forward to that.
Yeah.
Great to have you.
Thank you very much. Thanks for having me.
Thank you so much,
Yeah.
Vimal Kapur from Honeywell. We'll be right back.